Hi, I'm Greg Hunter. Welcome to USAWatchdog.com. With me today, someone that I have had request after request on the YouTube channel, on the site to try to get. I have been trying to get him, and today is the day he so graciously agreed to interview. We're talking about Martin Armstrong in the flesh of Armstrong Economics, Martin Armstrong. I'm excited. Thank you for joining us today on USA Watchdog.
Well, it's a pleasure. Thank you for inviting me.
Well, you came up with your brilliant economic confidence model, which is, I'm going to oversimplify your work, but cycles of political cycles, economic cycles based on pi, and that you're saying that confidence will always outweigh reality, and you forecast the world.
It's basically what you believe, and I mean, we've done all sorts of studies, like fundamentals. They say, all right, fine, if interest rates go up, stocks go down. It's just simply not true. The stock market's never peaked with the same level of interest rates twice in history. It's always a difference between if you think you're going to make 25% on the market, you'll pay 10% interest. But if you really think that the market's only going to go up 10%, you won't pay 10. So it's always a differential between what you believe and reality.
All right. I know you've had huge calls in your career. You called the '87 crash in '87. You called the collapse in the ruble in the late '90s. You've had huge calls, and you forecast the world. And I want to read you something that you've said on your site. That's a little new wrinkle, at least that I saw on your site. And it says, knowing how empires die is fundamental to forecasting the world economy. What do you mean by that? Why did you decide to put that on your website?
Largely because you have to understand, you have a lot of people talking about hyperinflation over the years, etc., and that's not how empires actually die. That's more or less the peripheral type economies, like Germany was in, after World War I. The empires that actually have collapsed, all the major ones, Rome, etc., even Britain, you don't see hyperinflation. But what you do see is massive debt that just keeps going and going. And then exactly in the process we're at, they are trying to sustain power. So then what do? They get very aggressive with taxation. They come after you.
Well, you were saying and that's another quote that I wanted to bring up about, are we headed to fascism? You did this article in April, and it says there's a worldwide hunt for capital that is destroying the world economy, and you say that's no joke. Is that what you're talking about, a worldwide hunt for capital?
Yeah, virtually now the G20, they've all agreed to share information, and the problem is that the individuals trying, a small business trying to go global, you can't. The only people that can act internationally now are the big multinational corporations, and that's it. Anybody with trying to we have employees in Europe. It's a nightmare just to try and pay them on a monthly basis. It's like, well, who are you sending this money to? Why? And all. It's crazy. They're so interested in making sure everybody pays taxes. And it's nice that the politicians stand up and say, oh, we're going after the rich. Sounds great. However, they are tracking wires of only $3,000, not billions.
So the global situation is getting worse and worse. We can get a little granular. We just had a big miss on the GDP, which they blamed on the weather. The best they could make it look with their numbers, 0.1% growth in the first quarter, which in the fourth quarter was 2.6%. That's a huge drop-off. What do you make of that?
Well, the major economy that we have is still strong underneath. It's still supporting the world economy, actually, because Europe's going down. You have all the emerging markets declining, Russia, China, etc. But we are declining from a standpoint is that it's not as robust as it was before, and it should turn down by the end of next year. So the primary thing that's holding up the U.S. right now is a lot of internal capital flows coming from everywhere. Part of that is geopolitical. A lot of it also, you see real estate, the high-end real estate is still booming. Why? Because you have a tremendous amount of capital from Europe and even China just trying to get off the grid, as we call it. They was talking about seizing money in bank accounts, etc. So one of the number one questions I get all the time, where do I put my money? If the banks can just take whatever they want now, there'll be bail-ins rather than bail-outs. People are afraid, what do you do with the cash? So you've been buying real estate, stocks, things of this nature, just trying to get money out of the banking system.
And you think we're going to have bail-ins globally, not just in Europe, but here in the U.S., everywhere. It's going to be this, as you said, a hunt for a capital globally. Is that what you think?
Yes, everybody knows I tend to advise a lot of the big institutions around, and I can tell you that they have told me directly that the Fed went to them and told them they will not be bailed out for proprietary trading. Only on deposits, that's it. So the Fed's been going around telling them, hey, you better change your models. They don't think there'll be a flight to quality as it was before, where you buy the long term and that saves you. They don't think that's going to happen. So it's quite interesting.
When you say there won't be a flight to quality, so they won't be buying 10-year Treasury bonds. They won't be buying. They'll have to bid those rates up. Is that what you're saying?
It looks like the long term is going to end up starting to rise, and any flight to quality will be extremely short term. Eventually, that flight to quality in what I say how empires collapse. Eventually, people don't trust government. And what happens is they then move from the public sector into the private sector. Now, in some of your extreme cases, like Germany, hyperinflation, everything went up. Real estate, art, metals, whatever it was, anything that was tangible. So what you're seeing today is the same kind of attitude, but it's not necessarily hyperinflation. They're buying real estate, they're buying, art, antique coins, antiques, everything's going up quite dramatically. And they're going to auction off one of the classic rare stamps that were owned by DuPont next month. And I think the last time it brought like a few 100,000. They're expecting over 10 million today. So, the collectible area, real estate, art, those areas that can absorb big money, they're doing very well right now.
A friend of mine in real estate, Fabian Calvo, sent me a little link about how much real estate was being bought cash. 43%. That pretty much backs up what you're saying. 43% of all houses, total cash buy, no mortgages right now.
Yes, it's mostly, I would say, probably more than 50% of the real estate, the high-end stuff that's selling in New York, all foreigners.
All
Same
foreigners.
thing in Florida.
And they're paying cash because they're afraid of their currencies, whatever currency.
Yeah, when you have the IMF saying that they should bail out the banks by taking 10% of everybody's account, they take it seriously. So they go, I better get my money out of the banks.
I got it. And what about gold? I know you've written a lot about gold. You've traded gold. What do you think the role of gold is in somebody's portfolio for protection? I know you say it's not for inflation, which is a counter to what other people say, but you also, it makes sense. You say you buy gold because you don't trust government. It makes sense to me too. So
that's when it goes up. If you do a simple correlation of gold and inflation, it's not there. Gold in 1980 reached 875. All right. It reached almost 2,000, here in 2011. All right. The Dow Jones went from 1,000 to, 17,000. So it didn't even keep remotely close to the appreciation of the stock market. Gold tends to go up when people are concerned about government, and the main thing that gold provides is it is movable. And so, like, for example, they call them money skirts. The people that had to leave, Russia, when the communists came, the only thing they could get out with was gold. You can't take the real estate then. So it's a different asset class. It's a movable asset versus a fixed asset. So that's the primary goal of gold. Its biggest problem is that it really cannot be bought by institutions because it doesn't pay interest. They need regular income. And so it's not going to be a big institutional investment, but for the average person, if you get to that stage where the government is going to really start to crumble a little bit more, which will be after, starting in 16, that's when gold will start to rally a bit. But the idea that we're going to have hyperinflation or it's a hedge against inflation, it's just not. The numbers aren't there.
What about what people like John Williams say, that they have all this, 16, 17 trillion liquid dollar assets and dollars held outside the country? And he says if people start selling them, people lose faith in the dollar, it'll come home to roost here in the U.S. in terms of inflation. What do you think about that?
Nothing really in particular, because largely you have to understand that there is no other currency they can use right now. You can't use the euro. There isn't a single national debt. So you have all this paper from the various different states. China tried selling its bonds last month, didn't do well. Russia hasn't done well. Even the U.S. long-term treasury auction the other day was weak. So we have, all this debt. That's true. However, that is the reserve of what everybody's using around the world. And you have countries issuing their debt in dollars, etc., where we don't have regulations on that. Japan, for example, you can never issue a bond in Japanese yen in London without the permission of the Japanese government. So the dollar has been the cornerstone of the economy, and you have to realize that yes, we have a large debt. However, the money supply increase that the Fed did produced no inflation. Why? It's because the money supply is really global right now. Everybody's using the dollar. And, that's why I was saying that how empires collapse. The core economy never collapses first. It's the last thing to go. All the peripheral folds in. And then your core goes. If the United States were to collapse first, then everybody has to automatically collapse. So it doesn't work that way. It comes from the outside in.
So it looks like the U.S. is going to be the last man standing in the global economy. Is that right?
Yes, that's why I wrote Empire is how they actually die. The core economy is the one that survives the longest, and it begins to fall from the peripherals in. And this is a phenomenon that is quite common, even if you look at real estate. How does a real estate bubble start? It always starts in the core, like New York City or something. Then it begins to spread from there out to the suburbs. Then when the core starts to decline, then it's going to hit, in the suburbs eventually. As far as the empire type thing, it works in reverse. It's the peripherals then that go, and then it moves into the core. So if the United States were to collapse first, the entire world has to collapse simultaneously. So it doesn't quite work that way.
So you think the U.S. will collapse at some point. When do you think that is? The economy will collapse.
I'm not sure if the economy will collapse. It's more or less the government structure. Our problem is that government just simply borrows, and there's no intention of ever paying anything back. This whole problem with taxes, etc. Honestly, we don't really need taxes anymore. You needed it when gold was money. All right, so you physically had to get some back. But today it's all electronic. So why do we spend so much time harassing everybody to get money when honestly they could just print and do the same thing? And if you look at our national debt, 70% of it is a cumulative interest. So this whole theory of borrowing money for what, I don't know. It's just lining the pockets of bankers. It's not actually helping, the man on the street or anything.
And what would you say about gold? Would you be a buyer of gold? Would you be holding gold as a core asset? Would you buy it now? Would you wait till later? Do you think? And what do you think about all this buying of gold by China? They're importing. Last year they imported the equivalent of the entire mining production of the world. What do you think about gold?
Well, gold is still in a bear market yet. It may make one more new low. I think before it's going to turn up will probably be about 2016. I don't see it going down drastically lower. I think the bottom line support's around $900. The last low was about 1150, so we're not talking about a dramatic fall, but it's more a question of timing. When are people going to really start to question government? And that's when gold goes up. You'll notice that gold rallied quite aggressively and peaked in 2011. All right, when did that happen? Basically, when the economy was going down and people were worried about government. So it's not inflation that drives it up. If that was the case, then gold's peak should have been in 2007 with the stock market. That wasn't the case. So gold tends to be more or less goes up when our economic confidence model turns down. And so it should be that period between 16 to 20 where it begins to rise.
With all this, this massive manipulation of, for example, LIBOR rates, that they've been charged of them, massively manipulating the interest rates. The housing market is manipulated because interest rates are low. The stock market is manipulated. The bond market has all this bond buying in it. They say it's manipulated. Does this manipulation, how does it affect your confidence model, or does it?
No, it doesn't really, because what happens is any manipulation cannot change the direction of the trend. You can go with the trend, increasing the volatility of it, but you can't turn a bear market into a bull market. Governments have tried. Japan's wasted $1.2 trillion trying to support the Nikkei. If everybody wants to sell it, it's just going to be gone. The confidence has to be there. And so the manipulations, this is the way they have always tried it, because that's where it came from in the 70s, when this all started, largely when Phillips Brothers bought Salomon Brothers. And then Goldman Sachs went after Jay Aaron. And then what happened was they were the commodity firms. So in commodities, it was always a rigged game. They're going to come take the inventory of wheat. So you put it out on, reduce the wheat, put it on the tractor trailers, run it around town until they were done with the inventory, come back and they go, oh my God, there's 20% less wheat, and drive the price up. This was the name of the game in the 70s. It was always that way. So that culture then moved to Wall Street. So, Salomon Brothers was the first to get caught in the early 90s manipulating U.S. Treasury auctions. And that's when, Warren Buffett came in, et cetera. But, these people can't manipulate the trend in changing it, which is why every time they have to be bailed out. When these things go bust, they're sitting there always on the wrong side of the market. They're not really brilliant traders. If you're paying enough bribes, they figure that they got the game rigged. They don't have to do risk management. And this is why they keep needing bailouts every time.
And you think they're going to be needing a bailout again, and you think the next crash, the next big trouble spot, according to your forecasting, which incidentally you are brilliant, is you're talking about the end of 15. That's when you say the next real trouble spot is.
Yeah, it's going to start after that, and this time it's most likely going to be like pension funds, etc. There are major brokerage houses that are now starting to refuse to deal with pension funds because they know they're going to get sued. And the pension funds are most of them were designed on the old benchmark 8% interest rate on the 30-year bond. And so they calculated their models and said that's what they needed. Now, they haven't been able to collect the 8%. Most of them are really underwater. And so we're going to see a lot more failures on the pension fund system. Here in New Jersey, the Governor Christie went and told the state unions that, gee, we have $56 billion unfunded pension liabilities, and the unions are going to have to give something back. And they said, no, we want more. So, we're looking at major civil unrest coming because these unions are really fighting. I just posted on our web today, you have the teachers union in Chicago proposing to put a tax on futures contracts and stocks on exchange in Chicago. The nurses union in New York wants to tax Wall Street to pay for their pensions. What's Wall Street got to do with their pensions? Everybody wants somebody else to pay for them. And this is where we're going. The pensions are just absolutely folding.
Are there going to be, is this going to, when you talk about the price of gold going up, what do you forecast the price of gold to be? I know it's a big component in the world economy and on a lot of people's mind. Where do you suppose it will go in dollar terms, price-wise?
Well, the major resistance in dollars starts around 2,300. You have to get through that area. Once you get through that area, you'll probably eventually go up to 5,000. But you have to keep in mind with those kind of numbers, okay, fine, where's everything else? And it appears as though we may end up with a situation where pretty much all tangible assets start to rise as people try to get out of cash, out of the banks. You have governments hunting taxes everywhere, so it's crazy. It's in London, they just posted in the Telegraph this week that, oh my God, the tax revenue can just take money out of your account and they don't even have to go to court. The Brits are really surprised over this. So, government is out of control, but, honestly, they always portray it as they're going after the rich, but ask them, who are the rich? These are wires now of $3,000. It's not billions. So pretty much anybody that has a job is now considered the rich.
And let's wrap up here with Ukraine. How does that play in with the global breakdown? Some people say that Putin's just going to milk Ukraine and let it fall into an abyss. They need $50 billion. He's just going to back out. He's just going to let it. He's going to pick up the pieces later. Other people say this could turn into a shooting war. How does Ukraine and war fit into your forecasting?
The reason we had targeted Ukraine for the beginning of this stuff was that largely Ukraine, of the former Eastern Bloc Soviet countries, is the biggest population. It's about 45 million. I mean, Estonia, Latvia, these other ones are like 3 to 5 million. So they're very minimal. Ukraine is where all the pipelines from Russia go through to Europe. So it's been very strategically important that way. But the Ukrainians are, it was really, honestly, a grassroots uprising against really corruption, and that's what it was. Now, the U.S. has sent in the CIA and everybody else, and they've taken over their government, and they've more or less threatened them and said, if you overthrow this one, you're on your own. But they're largely the canary, I think, in the coal mine. They're the ones that have risen up first against this proliferation of absolute corruption from politics. And you're seeing the same trend emerging in Venezuela, Thailand, Turkey. You saw it in Nevada here in the United States. Everybody knows this is getting out of hand. What's going to force them off their sofas and stop watching TV? It's going to be interesting. But you have unemployment in Europe among the youth at 60%. This is intolerable. So Ukraine, unfortunately, it had the third largest army before, United States, Russia, and then Ukraine. And, but they are fiercely independent, people. This is really what they want. And they're not a puppet of the West. They really don't want to be a puppet of the West or the East. So I think you probably will see a shooting match, but most likely not until after September. And a
shooting war. You'll see a shooting war in Ukraine.
I think you're just definitely going to see that. Putin, you have to understand, you can't judge people by it yourself. You have to really look at how people think. Putin is still old world. And we have actually a Russian site too, so I mean, and I know a lot of people from that area. And both pro and con. The number one thing that they say is that, well, it's good, Russia's getting bigger. You have to understand that China didn't lose any territory when communism fell. Russia did. So it's not that their economy is, he should be really focusing on making the economy a good competition to the West, but instead it's empire. It's old landmass, and that's what he looks at. So you have to understand, Putin has come out even and said that he wants to see the Soviet Union restored by 2020. What's he going to do with it? I don't know, because he's not improving the economy. Crimea, basically, you had to send in almost $200 million there just to bail it out. Eastern Ukraine isn't worth really taking, but it's landmass. That's what he's looking for.
And what about global war? Could Ukraine or Syria or what's going on in Senkaku Islands, China, Japan, Philippines, all those people over there, any of those things, could they turn into a global war?
Yes, I mean, largely war comes. We have a war cycle that we've done correlations with. War does not come when people are fat and happy. It only comes when the economy turns down. If you're mad at you've lost your house, your car, whatever, the way a politician gets out of it and say, hey, it's not me, it's him over there. So what you get is largely this kind of a problem. And every war that takes place usually comes after the economic decline. I mean, World War II comes after the Great Depression. I mean, so you have to have people mad at something. If everybody's doing very well, nobody cares. They're not going to fight for war. So you have Russia turning down. China peaked in 2007, is declining. Once we decline, the rest of the world we're the last one holding everything up. So Europe is a basket case, and Japan's terrible. So that's why you're seeing, saber rattling between Japan and China. I was in Beijing, and honestly, I just asked the concierge, I said, is there a Japanese restaurant nearby? And he looked at me like I was a traitor. You can hardly find a Japanese restaurant in Beijing or down in Singapore because they still really hate the Japanese from World War II.
And when do you forecast we get it after, I guess, evidently, the next downturn, after 2016? So in the 2016, 2020 timeframe, is that what you're forecasting? Some sort of global?
That's when things really get quite aggressive. Our war model turned this year, 2014, so all of a sudden you start seeing Ukraine, you're seeing uprisings just about everywhere. So that was right on target, and I would say it correlates largely with the economies. And although our economy is still up, China's stock market, Shanghai, they all peaked in 2007. So the economy is really, suffering outside the United States for now. We don't see it yet, but we will after next year.
So global war before 2020.
It looks, at least, we have two models. One, we separate internal problems such as civil unrest, civil uprisings, and that can be also revolution and civil war. That is one which has a little bit longer cycle. That's about a 300-year cycle before you see that. And the last time we had that converge with this other one, which is international war, which is a shorter cycle and more frequent, that's about a 25-year cycle. The other one's about a 300-year cycle. So the last time we saw major civil war type things, honestly, was and revolutions was the late 1700s, American Revolution, French Revolution. We overthrew this type of government, which was, I think we're going to basically have the same problem here because all governments, it's just hopeless to solve the deficit problems. The pensions aren't funded. It will collapse. There's no question about that. But largely what we have to be concerned about is what type of government do we get? Do we go to the right, more authoritarian, or are we going to go more towards democracy? I mean, I'd like to see freedom and democracy, but we have to respect that governments are getting much, much more authoritarian. People are running governments that aren't being elected. And that's really what's going on.
And you're saying that 300-year cycle, that big cycle, is coming up. We're coming up on that cycle according to your forecasting.
Yes, that turned here in 2014 also.
Oh,
So,
so
and
we
that's
could
why
have
you
a
see,
global war between now and 2020 is what you're saying.
yeah, I mean, the first model, the 300-year model, was civil unrest. And you've been seeing this, going into it was kind of like the Occupy Wall Street, but that was peaceful. Next time, the Occupy starts, you're going to see much more violence, as you're seeing in Europe. But that will probably take place in the U.S. after 16. But in Europe, you're seeing, unrest everywhere. Separation movements. Scotland's coming up for a vote in September to separate from England. You have the EU court just said there has to be a financial transaction tax. That's shifted the polls in England. England may leave the EU. I mean, there's a very strong element there to get out. And so Europe seems to be absolutely crumbling. And France, Holland came out and admitted that France was on the verge of bankruptcy, but give him more time. So I mean, it's an absolute disaster zone everywhere you look.
And with that, Martin Armstrong, Armstrong Economics, thank you so much for joining us today on USAWatchdog.com. Thank you so much for agreeing to interview. I hope you come back.
Oh, thank you very much for inviting me.